Well, thank you very much for joining us today. Happy Thursday to you. And that means it's weekly export sales day. We did get those numbers a short time ago. And I want to run through those numbers with you, and we'll see just what we had for sales last week out of the U.S. All right, we'll start with the corn number. The expectations were 300 to 600,000 tons for this past week. It came in at 372,200, so it was as expected. Soybeans were expected to be anywhere between 700,000 and 1.6 million. That was a pretty wide range of guesses. I guess technically it was in there at 830,200 tons. Soy meal was 122,800 tons, but the trade was looking for a minimum of 150,000, maybe to as much as 350,000. So it missed there. Soy oil, they were looking for none to 14,000, and it came in with net reductions of 2,400 tons. That would be a small ouch. On the wheat, 348,100 tons. The trade was looking for 200,000 to 600,000, so it was in there within the range of guesses. I want to bring in Brian Hoops of Midwest Market Solutions, and we'll chat about this for a little bit. So overall, as I'm looking at these weekly export sales numbers here, Brian, it looks like a bit of a yawner week. Not much to really write home about here.
Yeah, overall, Moreland, kind of a disappointment as far as these export numbers go. Notice that there was about 30.5 million bushels of soybeans that were purchased. Well, China accounted for 27.4 million bushels of that total. So China continues to be a huge player in this market. And you can see by that total amount what percentage they're taking up of this entire export business. It's really important that we keep them as a decent buyer, and they are probably going to start slowing down their purchases from us if they can buy South American soybeans, because they can buy them a lot cheaper. So that's, I think, is something that is a concern in the back of the mind of traders. We had one day last week where there was some sales to China. So far, 4 days this week, nothing to report as far as any large private export sales. The corn number, again, it's disappointing, 14.7 million bushels, way down from where we need to be to reach the USDA forecast. China canceled a cargo of previous corn purchase that was on the books. And the wheat, pretty much uninspiring. It's slightly above the number where we need to be to reach the USDA forecast, but pretty much just a lackluster export sales number all the way around here as far as our trade goes. So, you may want to start looking ahead to next week's supply and demand report on the 9th, and the trade will start anticipating that we may see USDA lower export profile, especially for corn, possibly for wheat and soybeans as well, as they start looking ahead as well. So if we would happen to see an uptick in yields next week, increase in production, such as what the StoneX survey that came out last night suggested, we could be seeing ending stocks starting to increase, and certainly that would be bearish for the market at least until we had some sort of a weather threat again.
All right, let's take a look at our prices overnight then. Our quotes are provided by bar chart. On the corn market, we were lower again last night. December corn down 6 1/4 at 681 1/4, so it really never got any traction last night. Soybeans went down. You had January down 16 3/4 last night at 1437 1/4. And in the wheat market that had that huge decline yesterday, it was down again overnight. December Chicago wheat down 16 1/2 at 829 1/2 per bushel. In Kansas City, you had December going down 13 1/4. It's all the way down to 927 now. And in the Minneapolis market, you had December down 10 1/2 cents at 938 3/4. And for those of you watching the cotton market last night, December was just 10 points higher this morning at 79.10 after that big expanded limit up day that we saw yesterday. All right, we'll take a quick break right here. Brian, we also had export numbers for beef and pork. Our audience might be surprised at those numbers. We'll discuss when we come back. We are examining the weekly export sales numbers with a little help from Brian Hoops, president of Midwest Market Solutions. So now let's look at the beef and the pork numbers that came out this morning. And on the beef side, we had a grand total of 13,000 tons that were sold. We had 9,200 tons marked for sale for this year. The key buyer there was Japan. They bought 3,000 tons of that. And it looks like Mexico bought 700 tons. For next year, we had 3,800 tons that were sold, and we had 2,500 of that going to Japan for next year. China only bought 900 tons of that total of beef. Now, on the pork side, wow, they came roaring back after cutting it in half last week. Now it's back up to where it was a couple of weeks ago. Net sales, 48,400 tons. That includes 47,900 for this year, and then you tack on another 500 tons for next year. That happened to be China, by the way. For this year, the biggest buyer was Mexico at 12,700 tons, but China picked up 11,200 tons for this year. And then you add on that 500 for next year. So they accounted for 11,700 tons all by themselves. So they were back there in a relatively big way once again. And Brian, that just underscores once again how much we, for better or worse, rely on China to buy our ag goods.
Yeah, it's exactly right. And so, their economy is slowing. They still have shutdowns or random shutdowns because of COVID. So, things are not greatest over in China, and that's reflected in some of their purchasing of U.S. products. You look at these export numbers for pork, really outstanding numbers. You can just say that right off the top of your head here. Those are some big numbers as far as shipments and the sales go, but they have to be equally disappointing for beef. The sales for this marketing year were just a little over 9 million tons. And then you add the two marketing years combined to get to that 13. That's a really disappointing number. Our shipments were about 18 million. So we're still sending out some product that was previously purchased. But, it's a real dichotomy between poor beef sales and really outstanding pork sales this morning. We did hear some cash cattle trade in the Southern Plains, about $1 lower, which was a disappointment to the trade. But now we're hearing that maybe that was just low quality cattle. There was some trade in the north at $1 to $2 better. So that's more in line with what we were thinking or coming into this week with the tight show list numbers, that we'd see steady to higher cash trade. But I think the futures were disappointed yesterday after hearing that 149 in the Southern Plains.
So December finished 55 lower yesterday at 151.40. Let's look at the feeder cattle market, see how they finished yesterday. Now, they had a big upward day based on the lower corn market yesterday. We had November up $2, January gained $1.80. It was at 180 even. Looking at the lean hogs, we finished up yesterday with the December down $1.90. A lot of pressure there at 83.30. Way off its earlier high of the day by about $1.50. Well, we'll see what happens this morning after these interesting export sales numbers that just came out. Thanks, Brian, for the help. Brian Hoops of Midwest Market Solutions. So, Janet, we'll get some answers on what the trade wants to do at the bottom of the hour.